Right now, millions of Americans are waking up with the same question on their minds. Why is my payment late? Why hasn't my money shown up yet? And is something changing behind the scenes that I should know about? If you rely on Social Security, whether that is retirement benefits, SSDI, SSI, or survivor benefits, this is not something you can afford to ignore. Over the past few days, banks across the country have quietly begun adjusting the way they process incoming government deposits. This is not happening because Social Security is running out of money or because payments are being reduced. It is happening because new banking rules are taking effect, and they are already creating confusion. Some recipients are seeing their deposits arrive later than usual. Others are being asked to verify information they have never had to confirm before. And a small but growing number of people are reporting temporary holds on their funds. Before panic sets in, it is important to understand what is actually happening. There was no press release from the Social Security Administration, no letters sent to notify seniors of this change, and no televised announcement. That is part of what makes this so unsettling. These changes are not coming from Social Security itself. They are coming from banks, from updates, to internal compliance rules tied to federal regulations that most people do not hear about until they affect their accounts directly. Banks like Chase, Wells Fargo, Bank of America, and several regional credit unions are updating their internal systems. These systems manage how federal payments are received, verified, and released to account holders. Even if Social Security sends your payment on time, your bank can now delay when you actually see that money. That is the gap where problems are beginning to emerge. Think about it for a moment. You have been receiving your Social Security payment on the same day every month for years. You have built your entire budget around that deposit. Rent is due on the 1st, utilities on the 5th, credit card bills on the 10th. Everything is planned around the expectation that the money will arrive exactly when it has for years. Now, suddenly it is not there. You log in to check your balance, refresh the app, call the automated line, and still see nothing. That moment of panic is real, and it is happening to far more people than you might imagine. Across online forums and local news reports, retirees and benefit recipients are sharing similar experiences. One person said their check usually arrives on Wednesday, but this month it did not. When they called their bank, they were told the payment was under review due to a new policy, but no one explained what that policy actually involved. This lack of information opens the door for misinformation. Some people start to believe benefits are being reduced or payments are being rerouted. None of that is true, but the fear is genuine. Here is the truth. The issue has nothing to do with eligibility, work history, or the amount of benefits. It is entirely about how banks are now required to handle government funds. If you receive Social Security by direct deposit, which accounts for over 99% of recipients, these changes could affect you in some way, even if you do not notice it immediately. It is essential to understand one key point. Your Social Security benefits themselves have not changed. The Social Security Administration is still sending payments exactly as scheduled. Your monthly amount is the same. Your payment date has not been altered. The problem is occurring at the banking level, in the space between when Social Security releases your payment and when it becomes available in your account. Many people call Social Security offices in a panic, thinking their benefits were delayed or reduced. From Social Security's perspective, nothing has changed. They processed your payment and sent it out on time. As far as their records show, everything went through normally. The gap that causes worry is entirely on the bank side. You might be asking yourself, I have been receiving Social Security for years. Why is this happening now? That is an excellent question, and understanding the answer explains why these changes are rolling out quietly. Social Security does not simply send money directly to your account. Each payment travels through a process. First, the Treasury Department releases the funds. Then, the funds move through the federal payment system. Finally, your bank receives the deposit and determines when and how it becomes accessible to you. That last step is where the new rules take effect. Over the past year, federal regulators have required banks to tighten the handling of incoming government payments. The goal is to reduce fraud, prevent account takeovers, and stop illegal rerouting of benefits. On paper, this sounds reasonable. In reality, it introduces friction. Understanding why these regulations exist helps make sense of what is happening. There has been a significant increase in fraud involving Social Security benefits in recent years. Criminals have become more sophisticated, hacking accounts, changing direct deposit information, and rerouting payments to accounts they control. By the time a victim realizes what has occurred, thousands of dollars are often already gone. Advocacy groups, law enforcement agencies, and Congress have all called for stronger protections, leading to these new banking regulations that require additional monitoring and verification. The intent behind the rules is genuine: protect recipients from fraud. However, the execution is creating the confusion and delays we are seeing. Late last year, banks were instructed to update their compliance protocols for recurring federal deposits, including Social Security, SSDI, SSI, and veterans benefits. These updates focus on identity verification, account activity monitoring, and the timing of payment releases. Put simply, banks are now required to double-check certain accounts before releasing government funds. Not every account, not every payment, but enough that the delays are noticeable. If your account shows unusual activity, recent changes, or mismatched information, it may be flagged. When that happens, your deposit does not disappear. It may be paused for hours, sometimes for a day, and in rare cases longer. Some banks have confirmed internally that these checks are automated. A computer system reviews accounts based on programmed rules. Computers cannot exercise judgment or common sense. If something triggers a rule, the payment is held. Period. Triggers for holds can include simple, everyday changes: a new mailing address, a new phone number, adding or removing an account holder, opening a linked account, unusual withdrawals, deposits from unfamiliar sources, or even the age of an account can all cause a pause. Some of these make sense from a fraud prevention standpoint, while others are completely normal life activities. The automated system cannot differentiate. This is why these updates have not been widely announced. Social Security itself has not changed. Your benefits are the same, your payment date is unchanged, but the responsibility for processing shifted quietly to the banks. From Social Security's perspective, everything is normal. From yours, if the money is not in your account, it feels like something is wrong. Even a 24-hour delay can have a domino effect. You expected your payment to arrive on Wednesday. You wrote a check on Tuesday, anticipating the funds. The deposit does not clear until Thursday, or until the check bounces, your bank charges an overdraft fee, and the company you wrote to charges a returned check fee. You are now out $50 to $70 in fees and still have to make the payment, all because of a procedural delay designed to protect you from fraud. These rules are not permanent delays, they are conditional checks. Most payments clear without issue. For those flagged, verification is required, and that process can feel sudden and unexplained. Some recipients are being asked to verify identity, update personal details, or respond to bank communications. A few receive calls or emails asking questions they have never faced before. This is the new system at work. The impact is most noticeable among certain groups. Retirement benefit recipients who have stable banking habits may never experience a delay. SSI and SSDI recipients, however, often see more temporary holds due to account activity patterns. Low-income accounts with irregular deposits or withdrawals can appear suspicious to automated systems, even when there is nothing unusual about the account holder's behavior. Survivor benefit recipients who recently switched banks or updated direct deposit details are also more likely to be affected. Imagine this scenario. Your deposit usually arrives on the second or third Wednesday of the month. You have planned your expenses down to the last dollar. Rent is due, groceries are needed, prescriptions must be refilled. Wednesday arrives and your account is empty. Thursday morning, still nothing. Social Security says your payment was sent. Your bank says it is under review. Anxiety builds because you cannot access the money you depend on. Even a short delay can disrupt lives. Benefits are not reduced, but missed payments, overdraft fees, or late charges become real consequences. Banks are not required to immediately notify recipients when a deposit is flagged. Often, the first sign is simply that the money is missing, which fuels rumors of cuts or changes that are not happening. Banks are increasingly sending automated messages asking recipients to verify identity, update contact information, or acknowledge account terms. Ignoring these messages can prolong holds. It is critical to respond quickly. Verify that the communication is legitimate before acting, since scammers are exploiting these changes by sending fake emails and texts designed to steal personal information. Always contact your bank directly using verified contact information before taking any action. The good news is that most delays are brief. Once verification is completed, funds are usually released within the same day or within 48 hours. Awareness and proactive action are key to avoiding stress and confusion. Here is what to do now to prevent delays. First, check your bank account details. Make sure every piece of information is current, including address, phone number, and linked accounts. Even small mismatches can trigger holds. Second, respond promptly to legitimate messages from your bank. Verification may be the only step standing between you and your payment. Third, if your deposit does not arrive as expected, contact your bank immediately. Ask if a review or verification hold exists and follow their guidance to resolve it. Fourth, remain calm. Social Security has sent your payment. These are procedural banking delays, not reductions in benefits. Most payments are still arriving on time. A small percentage experiencing temporary delays can seem significant because of the millions of households affected. Banks are in the process of fully implementing these updates over the next few months, and awareness now will prevent unnecessary stress later. Social Security itself remains reliable and stable. Benefits are secure. These banking adjustments do not change the support you rely on every month. Understanding the changes and taking a few proactive steps ensures your money arrives safely and on time. Fear and uncertainty may exist due to the way these rules are being implemented, but the underlying program has not changed. Eligibility is not in question, benefits are not being cut, and Social Security is not at risk. Being informed and prepared today prevents panic tomorrow. Check your information, respond promptly to bank communications, and understand that temporary holds are procedural, not punitive. Your benefits are secure, and with a little vigilance, you can avoid the stress caused by these new banking compliance measures. Protect your money, your benefits, and your peace of mind, because knowing what is happening is the first step towards staying in control.